In the last 3 years, Palantir is up 61%. Year to date, it's up 132%. And during this past month, Palantir has been all over the news. Palantir stock falls 9% after Morgan Stanley cuts ratings. Palantir downgraded by Morgan Stanley on overdone AI optimism. Palantir stock sinks after downgrade, with half of analysts now bearish. Palantir stock receives composite rating upgrade. Analyst, is Palantir stock the right AI play? So for the rest of this video, you'll see a bunch of stars at the top of the screen. A star will be added every time we have a good metric. The more stars, the better the business. First, let's look at Palantir's expected growth, otherwise what we can expect them to do going forward. We want both growth metrics to average above 8%. Palantir's next year projections are good at 17.4%, and the next 5 years looks like the growth increases to 82.2%. We add the maximum 1 out of 1 stars for this section. Next, let's look at Palantir's key valuation metrics, specifically 5 of them. These key ratios, we want all of them to be below the index in order to give Palantir a passing grade for this section. The price to sales ratio is at 17.3, whereas if you invested in an index, it would be at 2.47, a fail. The PE ratio is non-existent, indicating an unprofitable company, whereas the index is at 22.22, a fail. The price to cash flow is at 87.73, whereas the index is only at 15.84, another fail. The price to book is at 11.89, whereas the index is at 3.9, a fail. And for the PEG ratio, we want the ratio to be above 1, and it's at 1.31, so I can give that a pass. Noting that down in this section, we add 1 star out of a possible 5. Following that, let's look at Palantir's operating performance, specifically 6 key metrics that deal with its business health. For these first 3 returns, we want the percentage yield to be higher than the alternative, which is again the index in order to get a passing grade. The return on assets is at negative 1.32%, with the index at 10.03%. That's a fail. The return on equity is at negative 1.81%, whereas the index is at 27.17%. Another fail. The return on invested capital is at negative 2.98%, with the index at 17.59%. Yet another fail. For these 3 margins, we want the yield to at least be above 15%, and if there's a comparable with an index, we want it to be higher than that to give a passing grade. Palantir's gross margins look very healthy at 79.15%, but no comparison, but we'll give it a pass. The operating margins are at negative 3.22%, a negative number, so we fail that. And net margins are negative 2.35%, another fail. For this section, we add 1 star out of a possible 6. Next, let's look at Palantir's dividend metrics. Basically, if you're like me and put great importance on getting paid as a shareholder, you'll focus on these metrics. Pretty much Palantir doesn't pay out a dividend. This section, if it did pay out a dividend, would give us answers to what the yield was, what the buyback yield was, and the payout ratio. Palantir doesn't have any of those. For this section, we add no stars out of a possible 3. Let's move on and look at Palantir's financial health by checking out its balance sheet during its most recent quarter. For these 5 metrics, we want a decent figure, but also we want them trending in the right direction to give a passing grade. We see its assets at $3.9 billion, which is trending up. That's a pass. Liabilities at $945 million, which is trending down, which is also good. Debt at $245 million, which is also trending down. That's a pass. Equity at $3 billion, which is trending up, so that's another pass. And cash holdings are $3.1 billion, which is trending up, another pass. For this section, we add 5 out of 5 stars. Looking at free cash flow, right now Palantir has a low cash flow at $375 million, and it's steady, and we'll give that a pass. And finally, for this section, we add 1 out of 1 stars. What I see from these key metrics, Palantir has a disappointing business, making it even worse with its recent downgrade. Next, we're going to look at Palantir's valuation, but if you stop watching here, you'll get an idea of what this company is all about based on these metrics. And at this point, I wouldn't invest in Palantir solely on its business. Of course, the price can sway me either way, but just by looking at the business, I wouldn't buy it. Okay, now let's look at Palantir's stock and determine an optimal price point if you're interested in buying this stock. When we see price targets for Palantir, on the low end we see it at $5 and at the high end at $25, with the average price at $14.04 per share. Looking at the 6 most recent recommendations, 5 maintain a neutral to bearish rating, which is the most recent was a downgrade. Let's also include Graham's number, which is a valuation method popularized by Benjamin Graham, the father of value investing and Warren Buffett's mentor. We include the book value at $1.38, earnings at negative 2 cents, but the Graham number doesn't accept negative numbers, so we'll help the stock a little bit and put 1 cent for earnings. And so we get 56 cents per share, making Palantir incredibly expensive right now. But unlike analysts who can be too optimistic and Benjamin Graham who can be too conservative, there should be a middle ground, and that's my fair price for Palantir. But before we get to that, join my Patreon and you'll get access to every grade from every company I've analyzed. It's updated all the time. Go to patreon.com/GrowthShares or click on the link in the description. We can probably all agree Palantir isn't that great of a business, but should you buy it at its current price? I give Palantir a fair price of $5.06 per share. Right now the stock is expensive, and you'll see that many long-term investors will think so as well. In the end, I give Palantir a final grade of 27 out of 99. Overall, we've got a disappointing business with an expensive stock, which makes for a bad combination. Unless you're all in on the AI hype, I'd avoid investing in this company. So tell me what you think of Palantir. Invest wisely, and as always, take care of your money.